Web3 Payments Revolution, Lin Dai and Carter Razink on transforming digital commerce. In this episode, Dr. Jemma Green is joined by Lin Dai, founder of Superlogic, and Carter Razink, co-founder of Spree, who are revolutionizing digital payments through blockchain technology. From transforming loyalty points into universal digital currencies to building new payment rails that could save merchants billions in transaction fees, Lin and Carter share their vision for a more efficient and equitable commerce system. Together, they explore how Web3 technology is finally ready to deliver on the original promise of peer-to-peer digital payments. I'm your co-host Anthony Pearl, and whether you're an investor or a startup looking for insights, it's time to get unblocked.
Carter and Lin, it's a real delight to have you on UnBlock'd today. Thanks so much for joining us.
Yeah, thanks for having us.
Yeah, thanks for having us.
So I might just start with intro question around what are the companies that you both working at and founded as well? Perhaps Lin, you could start off by telling us a little bit about Superlogic.
Yeah, thanks, Gemma. So, I'm a serial tech entrepreneur, had a couple of different companies that in Web 1 and Web 2 that we took public. And back in 2015, I went on a kitesurfing trip and met Bill Tai, who's one of the greatest investors of multiple generations, first investor in Zoom and Canva, and at the time, also one of the first investors in Bitfury, the largest Bitcoin mining company outside of China, and which is kind of currently publicly traded, taken public as HUD-8. So back in 2015, I met Bill, and we were talking about what is the blockchain use case beyond just digital asset to digital asset trading. So a lot of these discussion really kind of culminating in kind of me launching on the company Superlogic. So Superlogic basically had this thesis that digital asset can be used for interact with everyday consumers and be used for everyday purchases. So now it was very early in 2017, 2018, we launched a company, and certainly the technology wasn't quite there. The consumer adoption wasn't there. The merchant adoption certainly wasn't there. So we decided Superlogic to focus on a B2B enterprise model, build out some of these rails for companies we think really desperately needs it. And those companies we choose to target are major enterprises and specifically bank rewards programs. So American Express is a investor in Superlogic, and we built out a number of kind of Web3 and blockchain powered technologies, including this really fun technology that actually allows rewards points from corporate balance sheets and in kind of siloed corporate system to really flow freely to millions of merchants, right? So to allow their kind of these rewards points, which is, if you think about a digital currency, to be very easily spent via a new type of payments rail that is not kind of the traditional credit or debit card clearing system. So that's kind of the founding story of Superlogic and how we use Web3 technology for enterprise companies.
Gotcha. And so what you're saying though, there's kind of two parts to the kind of blockchain use case. That one is around points and the other one is around payments.
Yeah, clearly from the very first Bitcoin white paper, it was kind of envisioned that cryptocurrency can be used as a payment as well as a store of value, right? So I think blockchain has proven to be clearly a very good store of value. It's also have proven out a second case of very efficient digital asset to digital asset trading. The payment use case hasn't really been proven out yet. But back in 2017, when Bill basically invested and co-founded a company, we were this is years, if not decades away, right? To convince major banks that really transacting everyday commerce via blockchain seems very far away. So we kind of thought of a unique angle, almost, quote unquote, a hack, is that there are tens of billions of dollars of points, rewards points liability on corporate accounts. These are, if you think about it, essentially are just centralized digital currencies sitting on individual corporate servers in the cloud. So we're well, I bet it's much easier trying to go to a major enterprise or a bank, convince them to put their rewards points on chain than that convinced them putting their actual fiat currency, which has a lot more regulations surrounding, right? Which all of these regulatory uncertainty was not really cleared in the US until really this year. So we basically had a head start, was able to really operate and experiment and build use cases and talk to real merchants and talk to real banks for 5-6 years before kind of this idea of stable coin driven commerce become really a thing, right? So we had a lot of battle scars and a lot of actually hands-on experience, and kind of over that period of time built up a merchant network that was incredible. That's really today 2 million plus merchants that uses Superlogic rails to accept points digital currency as payment. And if you think about that, that's not too far of a leap. If you're already accepting digital currency in the form of points, why wouldn't a merchant really be open to also accepting stable coin or any other digital currency as payment, as long as the settlement with them is in their regular like fiat currency, right? So
Yeah. So it sounds like it's really an idea whose time has come, and that this like is a logical next step, adding in the payments piece.
yeah, we think so. Everything is with the technology the way it is now, and Carter can talk a little more, but it's like over the last couple of years, we know that blockchain is finally like fast enough and cheap enough, right? Like there are major protocols like Solana that can process transactions as fast as traditional payments network and can cost less than a penny for each transaction. So those are kind of like prerequisites, right? So in order to kind of be a better alternative payments network, you couldn't be really standing at the checkout of a coffee shop and wait 10 minutes for a transaction to settle, right? Like, so it had to be instantaneous, and it couldn't cost you $20 to transaction fee to process like $2 to buy a cup of coffee. So all of those like kind of like underlying infrastructure things are solved. And uniquely what we think kind of Superlogic has an important input is companies like Superlogic that has over time built a merchant network, right? So those are very few and rare cases that could be major processors currently, like a Stripe has a large merchant network. Or if you think digital payments provider like PayPal has those network, but they also all have kind of competing interests, right? So they have competing interests like open up cheaper blockchain powered payments and settlement, really cannibalize their very lucrative traditional payments business that's making everybody billions of dollars. So these are kind of like the middleman dilemma that all these companies with kind of merchant network need to be concerned about. So we think like there is this like, in order to kind of envision a next generation payments network, you need fast transaction, you need low cost, but you also need a massive merchant network. You also need to know how to incentivize consumers to switch their purchase behavior, right? Like kind of, paying on credit card, debit card is fairly easy for most consumers, right? So the UI UX consideration need to be there. And also lastly, it's just like, what is the regulatory constraints? And looking like US is leading the way to kind of removing actual roadblocks for kind of real crypto companies to come to market. So this does feel like it is the year that blockchain is not only good for quote unquote trade, but there is a pay use case that is starting to happen.
Great. I mean, building on that, Lin, question for you, Carter, which is like, given that coalescing of factors, how did the idea to co-found Spree come about, and what the company does and what you're intending to accomplish?
Yeah. So I think it's really interesting. Lynn gave really good insight on kind of the landscape of what loyalty points and these sort of more corporate digital currencies look like. And it's funny, we talk about like, when is crypto going to hit the mass? When we're at like the hundreds of millions of users, when do we get to that billions of users, that massive step change? And I talk to people, they are already using crypto, right? Loyalty points are crypto for normal people. And so you think about what's the use case. I already get sort of these rewards currencies when I spend my American Express card, and then I get Amex points back, and then I get Apple products or whatever that is. It's sort of the perfect spend or perfect commerce use case. And so working with Lin over the past couple of years in building blockchain infrastructure that solves some of these core problems of settlement for these digital currencies has translated almost perfectly to what we're already doing in the space today, which is trying to solve what sort of the Satoshi's ideal first line is: a peer-to-peer digital currency, right? What does that mean? I don't invest my money in digital currency expecting it to go up in value. Unfortunately, or fortunately, maybe it was necessary for everything we're doing here to be possible. That's what Bitcoin is now doing, right? It's a digital store of value. It's sort of this neutral digital gold is the narrative today. And so, I think about how do we get to the next 1 billion users? It has to address what Bitcoin was supposed to address, that it sort of became so good at an accumulator of capital that it stopped addressing. I don't spend my gold because I think it's going to appreciate. I don't spend my gold because I think that the money printers of governments are going to continue to run. I don't think that's going to slow down. And so I do spend my currency and I do spend my loyalty points because that's going to be something that devalues over time, but also it's built for commerce. And so Spree is sort of built for commerce. It is addressing the problems that we have seen with Superlogic, and now we're building a tool that's sort of a decentralized commerce layer to solve problems that we know other enterprises have. It is not just the people we talk to, it is a common occurrence. We're talking earlier, we just were at ETH Denver, and it was a really good time. Everyone we talked to had some form of experience with this problem. And so it's funny to think about Visa and MasterCard at this point. They're stuck in a hard spot. It's kind of like Google with their AI products. They don't want to build AI because it cannibalizes the search product that they're generating most of the revenue through. And so I view this as like, not to compare us to like an open AI, but there seems to be some sort of external push in the commerce space. And I think stables are a perfect medium of exchange. And with the Genius Act coming around, we're really well positioned to take advantage of that. And Merchant Network is sort of begging for a solution to this massive 50% margin on trillions of dollars in profit from two primary duopoly of payment processors.
Mm-hmm. Thanks for giving like the kind of context around like how payments work in the sort of B2B realm that perhaps isn't so visible at the consumer level, because you just pay the amount of money and you think that the company you're buying a product or a service for get all the money, but in fact they pay like quite a large fee.
Oh yeah.
And that's a real problem for them. Like, they would rather not have to pay 3%, I think is the kind of typical amount of money. I was thinking about like just taking a bit of a zoom out further around like payments, because you've got like the traditional kind of SWIFT network for settling payments. And then I saw like the credit card companies created kind of like a competing alternative to the SWIFT network, because becoming part of the SWIFT network is quite costly. And then there's a lot of criteria. You need like a corresponding settlement partner to actually participate in the network. And then I'm aware of like American Express Direct, which is kind of like competing with the SWIFT network. And now the credit card companies are allowing you to settle in stable coins as well. And so I guess my question around all of that is, can you see that the traditional players evolving their business to allow settlement using stable coins, and because they're already got the client base and the merchant network, that they will just stay, that the customer will just stay using them? Or will the merchants will deal with the friction of actually onboarding someone else because of the lower fees associated with using the Spree network?
Yeah.
Yeah, clearly all of the credit card companies, MasterCard, Visa, like kind of already rolled out different integrations with cryptocurrencies and stablecoin. It's very much in their best interest to support this new technology, right? And the behind the curtain look really is like, why not, right? Like MasterCard can accept, if they accept any type of cryptocurrency, they process it. We all know, like when I pay with any cryptocurrency, it settles immediately and there's no chargeback risk, right? If I buy a pair of shoes. So it costs MasterCard a lot less to transact that specific transaction because it doesn't actually have to lend out money or deal with issuing banks. It cut out all the middleman and it gets to keep the full 2.5% it charges. So as MasterCard, why wouldn't they do this, right? Like it actually increased their profit margin from 50% to probably 90% on that transaction. The problem is, well, we're looking at it, merchants and consumers never really get the benefit of this new technology, instant settlement, and no middleman layer, right? Like we basically, all the funds, all the transaction fees still flow to kind of the duopoly MasterCard Visa. And we think there's just prime for destruction, right? So they couldn't help themselves to really keep charging 2.5%, even though they're basically accepting cryptocurrency is a zero risk settlement layer, right? So they're not I don't see them passing on the savings back to merchants and consumers, that they can't help it. So that's the issue we're addressing. Now, everybody understand the use case that when I buy $2 cup of coffee, the small coffee shop owner had to pay exorbitant fees on that. It's probably they end up paying about 30 cents in fees through the payment stack, basically gets split up between the network, the issuing bank, the processor, and so on and so forth. So that's like a 15% tax on that cup of coffee for them. And they don't have that kind of margin, right? On average, probably have 4% margin. So really, everybody see the benefits of much cheaper, near free processing for kind of the small business owner. But, we deal with enterprises, right? At Superlogic, we talk to companies like Princess Cruise Line, Hyatt Hotels, and Walmart. Walmart, if they can actually save on their credit card processing fees, it is some $80 billion more to their net revenue, which actually Walmart is a 3-4% margin business. It's just a tremendous scale. Saving another 2% of their business, of their processing fees, is essentially a 60% increase in their market cap. So I've never seen any business idea that's like the merchants and the consumers are so aligned in incentive to change the status quo, but it's very hard to change, right? I think the Carter's idea around Spree really is pretty tremendous, because as a centralized company, I could go raise $100 million, $200 million to say we were going to build a centralized network, and that wouldn't make a dent, right? So really a decentralized approach where kind of everyone can kind of participate, where the consumers and merchants can not only use the network for cheaper processing, but they can also just participate and run the network, right? So that's really a very different model. We've seen time and time again, new wave of technology really challenges kind of the establishment, and that's really the only way kind of technology or society pushes forward. So we think we're kind of, and it's not, certainly Spree is not going to be the only project that tackles blockchain for payment, but I think there is kind of a wave coming that will challenge kind of how payments are known today.
It's very exciting.
I'll just double tap on that too, thing that we've seen within the Web2 side of things over the past 20 or 30 years is email has been something that has commoditized the way that we transact with one another, the way that we exchange information. We are seeing the same thing with payments. Payments is being commoditized. And so that means that the incumbents, the sort of snail mail versions of payments, are going to be disrupted. So really, if you've been in Web3 for any amount of time, you've connected a wallet and you've signed a transaction, you are now going around what people have spent billions and billions of dollars building. And so it's not so far-fetched to assume that there's going to be infrastructure built around that experience, and it's going to be a lot better or as good as the sort of the tap of the card or scan of the phone.
Can I just ask a question now? I'm fascinated from a consumer point of view. Is it going to transfer across so that consumers going to see a drop because at the local level, they're not paying as much in transactions? Or do you think it's just going to still be taken by the bigger companies and not pass it on?
Yeah, that's a good question. So I think Spree is just a network, right? So Superlogic in this case is, we just launched a really exciting new marketplace on top of Spree. So we're a merchant, right? So we launched Bookit.com. So what is Bookit.com? Bookit.com is kind of a next generation marketplace where you can find premium travel, entertainment, and premium retail products all in one place. So think of it as Expedia meets Ticketmaster meets a premium version of Amazon, right? So you can search for any flights in the world, any hotels in the world, villas, resorts, cruises, as well as tickets to Taylor Swift or to your favorite basketball or football game, and also shop for products from companies like Bose, Samsung, Kimi Luggage, all these premium brands we aggregated. So what we decided as a merchant, right, for these marketplace with that aggregated kind of 2,000 merchant, we encourage all our merchant to essentially, hey, like this costs you far less to process the payment because we are using a brand new payments rail. We would love for all your merchants to pass on that savings in the form of rewards back to consumers, right? Because it's the marketplace and it's like dynamic and consumers going to make their choice, right? Because they have 2 million choices. They're going to make the choice, like if I'm going to Las Vegas in a couple of weeks and I'm going to see this hotel merchant had decided to pass on back 15% rewards back to me, and that other hotel has decided to pass on like 18% back, right? That is like literally next door. So consumer can make the choice pretty easily. I think a lot of this is going to happen in the form of competitiveness to the consumer, right? So I think consumer ultimately do benefit. It may not be in the form of a immediate reduction in price, but kind of the new payments and rewards will allow very easy like incentive for the consumers, right? And if you think about why we build Book It is like the traditional travel site has been around for 20 years. And if I book on Expedia, I'm getting 1%, 2% rewards back. And we all know like I love my points and miles and rewards. That seems like a very much like big corporations holding their margins and not really passing on to the consumers. So we want to do the opposite, right? Like I travel a lot, so I have a lot of tips and tricks of book this Marriott hotel or like take that like American airline fly and arbitrage the point this way. But it's very complicated. There's no good way to kind of really teach like my parents how to do it, right? The way to do it is like, hey, can we simplify the user experience of points and miles, rewards, hunting into just a platform that is just going to give everybody extraordinary amount of points back, no matter what you buy. Everything is just negotiated at like a large margin, and we're passing on back like probably 90+% of the margin directly to the consumer. So it's like the most rewarding travel or entertainment booking or premium retail shopping site. Like that's, and while the merchants are so happy that they pay so little fees and they get instant settlement, that they're passing on the rewards back to the consumer immediately.
Thanks for unpacking that, Lin. And yeah, I think what you're talking about is a place, a website where they can buy things and feel a sense of excitement, not only around what they're purchasing, but around the other things they might be able to purchase more readily. And the offering that you've got at the consumer level is really very consumer focused and thinking about sharing the value, not just from the seller.
Right. And also it's from a rewards point of view, it's also like kind of almost a universal rewards point. Before, if you fly with specific airline, those miles can only be spent with that airline versus wouldn't be great if I can earn 12% back when I booked in my hotel in Las Vegas and be able to now spend that point for Taylor Swift tickets. Like this doesn't really happen. And this comes from our experience working with very large but very siloed rewards programs. I think that's also a need. Is consumers are like, don't want to keep track of 14 different points and miles wallet, right? Like wouldn't it be great to be able to just have like one universal rewards point that's very useful across 2 million merchants.
Imagine that your wife, you'd be very happy about that because then you're not traveling on separate flights, which sometimes happens when you're trying to like optimize.
Yes, I'm the edge case for points optimization. So
Well, it sounds like you're an early adopter and the plan is to bring it to the mainstream.
That wraps up part one of our discussion, and I can tell you after discussing how bookit.com is revolutionizing the travel and retail marketplace with enhanced rewards, part two of our conversation with Lin Dai and Carter Razink will delve deeper into the future of credit and payment systems. Join us as we explore how their platforms are tackling predatory lending practices, introducing innovative crypto collateralized loans, and transforming traditional rewards points into meaningful value for consumers. We'll also discuss how Web3 technology is creating new opportunities for both merchants and users to benefit from a more equitable financial system. Don't miss this insightful continuation of our discussion on the future of digital commerce. That's all for this episode of UnBlock'd. Please check out the show notes for information on Power Ledger and other contact information. We welcome your comments and feedback, and please hit subscribe wherever you are listening. This podcast was produced by Podcasts Done For You. We look forward to your company next time on UnBlock'd.